Good morning, traders. It is April 17th, and we are about 3 hours into trading. We've had an exciting day today. We had the market blast higher on news that the economy was going to open up in phases. There are certain areas of the country that will be opened up earlier than others. Obviously, those that are hardest hit, like New York, will take a little while longer. The governor there said that they won't be opening New York until the middle of May. Every week that this lockdown persists, the chances for a credit crisis increase exponentially. So the fact that we're trying to get the economy back on track the first week of May, hopefully start getting businesses back in, they can start rehiring people. Hopefully by the third week in May, we start to get some traction and we can get the economy back on track. But if everything stalls out and we start seeing a lot of businesses having difficulty securing loans, they're not going to rehire their employees, everything starts to drag and this credit crisis starts to escalate, if there is one. So everything must go according to plan for this to play out favorably. And right now we've got Gilead with a nice drug that seems to be working well in some limited trials in Chicago. That's also boosting the market. You can see on the S&P 500 this big gap up here to roughly SPY 285. So that was very, very close to my target this morning. And we took profits on our SPY position that were long from 238. So we made almost a 20% return on that in less than a month. But it's time to take profits because we're getting close to my first target. I'm going to put up the daily chart. You know, I've been referencing this in my prior videos. I believe that the 100-week moving average is going to provide some resistance. So we'll put up the 100-day and 200-day moving averages, and then we'll go to the weekly chart, and you can see where those come into play. Right now, the 100-day and 200-day moving averages are going to be providing resistance at 300. I think that that's an aggressive target for this bounce. I believe that good news is priced in right now, and I feel that the recovery road is going to be very bumpy. I don't know that we get quite this high because even at the current level, this is approximately a 50% retracement off of the low right in this level right here. That's a pretty good bounce given that the first phase of the rally was coronavirus related. Asset managers were anticipating that there would be improvement in the spread of the coronavirus, so they did not wait. They started buying early. So now we're in this phase where we have to wait and see how quickly businesses can get back on track and how quickly they can rehire employees. So the government has already run out of its business stimulus money. They're looking to get another 250, 300 billion dollars, and that is critical to businesses hiring back employees. Even when everybody returns to work, they're going to be looking around trying to gauge how active the business is and how secure their jobs are before they start opening up their wallets again. This is going to take many, many months, and that means that the whole recovery is going to slow down. So we need to wait to see how all of this plays out. My suspicion is that the market is going to start hitting resistance somewhere in this level right here, that 288 level. I mentioned before on the weekly chart, you can see that 100-day moving average right at 288. That was my first target. We're taking profits this morning. We're not waiting. We're going to lock in that 20% gain. We'll let the dust settle. We'll wait for some clarity, and then we'll continue to enter trades. We had a ton of bullish put spreads that are expiring today. I'm going to put up the trade window. I'm going to go into the staged order screen, and you can see I left these up, but it doesn't include all the naked puts that we've been writing. We have been making on average about 10% return per month on these trades, and many, many, many of them expire on April 17th. As you go down the list, April 17, 17, 17, all the way down the list. These are all big winners for us, and we sold them way out of the money. We never even had to flinch or worry about any of these trades. So we did try and put on some bearish call spreads this week, and we've got a few bullish put spreads that we're trying to get off. I'm going to release my weekly swing swing trading video to YouTube subscribers tomorrow, Saturday, so you'll be able to watch that video and see the trades that we're looking at. But a very balanced approach up here. I was about equally weighted on my bearish call spreads, actually more bearish call spreads than bullish put spreads. So I feel that the market's going to start hitting resistance here. We've had a really nice bounce, but I think there are a lot of things that are unresolved right now, and this is going to shift from the coronavirus to the economy. And we're going to have to see how fast we can get back on track. So I think there is going to be some selling pressure ahead. Am I buying puts today? No. I think the first phase of this is to find stocks that are running out of gas and to sell out of the money bearish call spreads on them. I would not want to buy puts until I see option implied volatilities come in a bit more, and I would need to have some technical confirmation that the market is actually starting to roll over. If I go into a 15-minute chart, what would that be? I'd have to see this upward sloping trend line on a 15-minute chart violated. Takes us down to about the 277.50 level. I have to see nice steady selling pressure for that to happen. Are we going to get there yet today? No. Not likely. Next week? Probably not. I think that mega cap tech earnings are going to be really good. I think that we've got Microsoft and Amazon and Netflix all benefiting from the coronavirus. I think that Google and Facebook might see lower ad revenues, so they may be a little bit problematic, but overall not bad since they've got lots of cash and since their employees can work from home and since they don't have any supply disruptions in China. So those are all positive. So mega cap stocks, unfortunately, are not representative of the entire market. They're such a small fragment, but because they are mega cap, they comprise about 20% of the S&P 500. And typically into earnings season, the bid to the market is very strong until Apple or the last mega cap tech stock announces earnings. Speaking of Apple, that is my swing trade of the day. And I'm going to tell you a little bit more about it in a second. But first, we're going to take a look at some of the other swing trades because I know everybody's always trying to gauge how accurate this information is. So let's take a look at some of the trades that we did just this week. So I gave you my swing trade of the day on YouTube, and I'll do so again today. Again, these trades look good going into the close, and they should be good for an overnight position. After that, I don't know. The market's all over the place. You got to manage the trade and the profits on your own. So, Tesla, I showed you this stock on Monday, right in here. Monday, April 13th. I said, this is a good long. I think you should buy this. This will be a good swing trade. Stock was up $110 from the video, and it's still going higher. That was the Monday swing trading video. Tuesday came in, told you I like ZS. So ZS, April 14th, continued to push higher throughout the course of the day, closed on its high. The next day, Zoom, gone. ZS, beautiful. Wednesday, UNH, showed you that one. They had announced earnings right in here. I said I love selling the bullish put spread. Go down to this 200-day moving average, sell it out of the money. Stock continuing to move higher. Yesterday, I showed you Abbott. I said Abbott looks really good. Stock continued to push higher into the close. Today, gapped higher. It's pulling back a little bit, but still looks decent. I love this breakout on a longer term basis. If you're a short-term trader, yeah, you got to take some profits in here, especially on a big gap up like that. But the stock should still continue to move higher. Also showed you a really, really good stock yesterday. CODX, I mentioned it to you. I said it's been coming up on my searches and I really liked it. Video came out somewhere in here, somewhere around the $11.50 level. Look at that stock. It closed at $13.50. $2 higher on an $11 stock is almost a 20% return. Look at the move today. Please go back. Check the video from yesterday. Make sure that I'm telling you the truth. You got to verify the results. Otherwise, all of this means nothing because I can make any claim that I want to. But I try and back everything up that I say with timestamps and posts in my chat room or in the videos that you can go back and watch. So I know there's a lot of garbage out there in terms of information that's being peddled. This is the real deal. I want you to come in and take the free trial. Then you'll be in the chat room and you'll be able to see all these results real time yourself. So, what do I like today or what don't I like today? First of all, I've already told you that I'm a little bit suspicious of the market. Let's take a look at the 5-minute action, see where we're at. We've got this nice 10P cross back in here, but overall the action has been very, very choppy. So we had one test, two tests, nice support in here. This support should hold at least for a little while. We should see a little bit of a rally. I don't know that we'll challenge the high because this is such a big pullback in here that it's going to take a lot for the market to be able to recover from that, even with the good news of the economy opening back up and there being a possible treatment for it. I don't know that we get back up through this high. There's going to be some pretty stiff resistance. So what I am looking for is a attempt to get through that high and then probably come down and test this low. Now this afternoon, if we break that low, then there's a good chance that we'll continue to fill in a little bit more. So I'm fairly neutral in here. You can see the price action has been very choppy. Back and forth. There's a nice little support level right in here, but we can see that every time that the market gets up to this point, there is some resistance. We tried to rally out of the gate this morning. Nope, nope, nope. Resistance up here. There's some pretty stiff resistance. It got smacked down immediately. This wasn't a gap higher where we continue to grind higher and then roll over. No, there is some pretty heavy selling pressure right out of the gate. And if you go into the daily chart, you can see that this is very close to the previous high that we had right in there. That closing high at 284.90 should have been support this morning. And we kind of fell right back down through that. So I think we're going to see sideways action. If we get a decent move one way or the other, there may be some option lottery plays that I'll do in the last hour today. I think option implied volatilities have come down far enough for me to be able to find those. So I'm looking for some soft action in here, definitely some resistance, overhead resistance on the market over the course of the next few weeks. Any upside impetus that's left in the market will run out in the course of the next week or so as these mega cap tech stock earnings start to hit the wires. So I told you I was going to tell you a little bit more about Apple. Goldman Sachs lowered its estimate for Apple. I believe Apple has a number of different obstacles in its earnings report. One is that the last time it reported earnings, the service revenues were less than the market really wanted, so it had some weakness there. They also are heavily reliant on China for components, so there could be supply disruptions along the way. I think that also we've got a lot of people just getting back to work in China. They're not going to be looking to spend a lot of money on big ticket items. I feel the same thing is true here in the US. I think you're going to see some very soft phone sales until people actually know how all of this is going to play out. So Goldman Sachs lowering its target on Apple. I think they're probably spot on with this one. Let's take a look at Apple. That is my swing trade of the day, and I believe Apple goes lower. Look at the relative weakness. We've got a nice downward sloping trend line, and we're continuing to test this support with greater frequency. Let's put up that 1 OSI indicator that shows us relative strength or relative weakness. And here you can see relative weakness, orange line below zero. I think Apple goes lower. So let's try and set up a trade here. And we've got this 100-day moving average. The stock just can't get through the 100-day moving average. So this is proving to be very, very nice resistance for us. So I believe that that 100-day moving average at 285 is going to continue to hold. Apple, we hover over the E, get the earnings announcement. We see that it's on 4:30, so we have one expiration that we can get in before then, which is the 4/24 expiration. I like going out and selling an out-of-the-money bearish call spread using that April 24th expiration date, and you can go up and use the 285 strike price, so we'd be selling the 285 calls and buying the 287.50 calls, and we'd be looking to do that for at least $1 credit. Okay, so we're putting up $1. We're putting up $1.50, $2.50 between the strike prices. So $2.50 is our margin requirement, but we get to use the credit received, which is $1. So in essence, we're looking to make $1 and risk $1.50. And so if this trade works out, it'll be a 66% return by next Friday. I am looking at continued weakness in this stock. What would your stop be? A close above the 100-day moving average. You got to stop that trade out. Now, Apple does tend to rally into earnings, but I think there's enough pressure on it, especially with this downgrade. What I'm looking at is if it gets through this 277.50 support level right here, it's going to drop and fill in that gap, and I'm expecting that to happen through the course of next week, especially if the market starts to hit some resistance up here. So that is the swing trade that I want to leave you with. I think it also sets up good for a day trade today on the short side. So let's take a look at some stocks. I'm just going to fill in a little bit more time here because we're going to do some real-time searching. We're going to take a look at some of the features that are available in Option Stalker. First of all, after earnings, fantastic search. We didn't have a lot of earnings after the close yesterday, but this after earnings search on the bearish side, if there were a stock that was below the prior day low that announced yesterday after the close or today before the open, it would show up here, and this would be my go-to search on the open. I want to see that weakness, and I want to get on that trade immediately. And for most of these searches, there are a lot of proprietary indicators used in the searches, so let's be clear on that. You're not going to be able to replicate this. For a lot of the other searches that I use, even if you're able to replicate it on some other website or manner, you got to get these trades instantly, because if you wait a minute or two, those opportunities are gone in the first 10 minutes of the trading day. So you've got to be all over them. Option Stalker organizes it. Very, very easy to find. So this after earnings bearish search, really good one. After earnings bullish search, really good one. SLB, you can see that stock right on the list from earlier this morning. So that's one that you may want to check to see if there's an opportunity there. Now, the other searches that we're going to be looking at for swing trading after the earnings have already been announced, we're going to be going in and taking a look at strong after earnings search. And there's one on this list that's kind of a classic, J&J. They announced earnings this week. You can see right in here. What was the reaction? Pretty muted. It came out on this day right here where the B is. That means earnings before open. Stock didn't do a whole lot. It just kind of sat there. And I thought, wow, well, that's kind of a muted reaction to a good number. But the next day it started to take off and we saw it in this list. That's exactly what we're going to be doing. So we start to click through these lists, and as soon as I start to see the stock on the list, what would I want to do with J&J? I would want to sell a bullish put spread keying off that 142.50 level right there below the 100-day moving average. That would be my stop if the stock retraces. And you do the same thing for everything on the list. You go click, 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 click. Take a look at those stocks. You know they gapped higher after earnings. You know that our opening gap has been maintained or preserved. And then you can start going in and taking a look at these technical support levels. Oftentimes the stock does not show you what it's going to do for a day or two. So you look at the initial number and you're expecting a reaction. It doesn't come. But then 3 or 4 days later, you look at it and you go, dang, I knew that stock was going to be going higher and I missed it. Well, this search allows you to do that. Lots of earnings searches. We can go back in time and look at earnings releases. We can go forward in time for projected earnings dates. That's all built into Option Stalker. This is going to be a big search that we use in the course of the next week or two to set up our bullish and bearish call spreads and put spreads. So enough on the earnings announcements. Just know that we have a ton of resources in Option Stalker to help us trade and navigate earnings reports. So right now, let's take one more look at the market and see which side we want to be positioned on. Try and get a little bit of a read here. I've got the 1OP indicator starting to crest up in here, which tells me that this little bounce might be running out of steam. So I'm going to be inclined to take a look at the bearish side and see what we've got in terms of relative weakness. So we'll go in. We can use heavy selling. We could take a look at that first. Netflix down big after a monster run. This formation right here for candlestickers is close to a shooting star or evening star. That's usually pretty bearish, especially when followed by a long red candle like this. Yes, Netflix could see a little bit of selling pressure. We've got earnings next week. Take a look, see what else we've got going on here. Piton Nothing too interesting there. Again, some of the biggest losses that you're going to see, some of the best shorts that you're going to see are going to come off of these parabolic stock moves higher. So you can see through the screen right here in the corner that S&P is continuing to rally. I always keep that chart running so that I know every minute what the market is doing. And when I have my stocks highlighted, I can compare tick for tick what is the stock doing to the S&P 500. This is the layout that I prefer. So I don't see anything particularly good right in here. And since I'm looking for shorts, what I'm going to do is I'm going to sort according to dollar net change. And I'm going to be looking. There's a really nice example right there. Market higher, stock compressing. You've got a downward sloping trend line. It's through the low of this compression right here. CLX would definitely be a candidate for a short. So, Pete, what do I do? Do I short it here? Do I short it here? Is it time? Is it time? No, it is not time. Why? Because the market is going up and we don't have our 10P cross. So we need this to climax, and we need to have that nice clean rollover, and we need to see some evidence that the market has started to stall. We need to see tails above body. We need to see a couple of red bars in there. Give me something to lean on. So, no, this looks like it'll probably be a pretty decent short, though. Let's keep going through the list, and I'll take a look and see if we can find something else. TDOC. No, that's actually been a really strong stock in here today. It's been strong on a daily basis, so we're going to keep looking. And we'll go in. We'll take a look at. Actually, let's do a sort so we can get everything right up near the top. SRTY. Not really familiar with this stock, but that is some good relative weakness, which, by the way, I don't have to be familiar with the stock. I just have to see relative weakness. And in this case, you can see nice downward sloping trend line breaking through that support while the market is moving higher. This stock wants to go lower. I would have no problem being a little bit early on a trade like that. And if I shorted it right here, I would drop my alert line like this. I would click on that, and I would click on that, and I would draw my downward sloping alert line, and this all of a sudden becomes my stop if I enter the trade. I'll get a pop-up alert that says, hey, SRTY not doing what we wanted it to. I'll also keep an eye on the stock too, and if it happens to bounce or gain some relative strength versus the market, I'll get out. Also, if the market starts to really take off, then I know I'm on the wrong side of the market and I've got to exit the trade. But usually on a stock like this, as you've got it selling off and you've got the market going higher, the market will take off and the stock will stall for a little bit. And that'll give you the opportunity to exit the trade and not lose a lot of money. That is the cushion. That is the edge that we have by trading relative strength and relative weakness. It is such an incredible edge. I've got S&P traders in here. I like to trade the S&P too, but there is such a huge edge to stock that I've finally been able to convert some of them and to show them that you have a much higher probability of success if you can trade stocks with relative strength and relative weakness and use them as a surrogate market position that they've now converted over to only trading stock. Institutions that have huge amounts of capital, they don't bother with these individual stocks. Yes, they have asset reallocation, and that's what we're trying to ride, is we're trying to identify that, and that's what gives these stocks relative strength and weakness. We ride on their coattails. And that's a huge advantage for us. We can do 1,000, 2,000, 3,000 shares. And for us, it's great money. For Goldman Sachs, they're not going to look at this. That's an opportunity for us. Why would we want to play in the S&P 500 when that's where all the big boys are with the huge amounts of capital and they're doing all sorts of hedges and other types of trading? We don't need to mess with that. Let's just find the stocks and let's take that cushion, let's take that edge, and let's work it as hard as we can. That's what Option Stalker does. That's what we do all day long in the chat room. So I'm going to continue to look through here and see if I can find another decent stock with some relative weakness. That's nice relative weakness. Also through the low of the day, not through the prior low of the day, but and you can see this is an ETF. So I tend not to want to focus on the ETFs too much. I want to find individual stocks. That's pretty decent. AG. That's got some pretty good relative weakness, but this is the process that we go through. And I'm going to go into the top of this list. Again, we've got the market rallying right now, so this is the time when you want to go in and you want to get your shopping list together on the bearish side, because as soon as this rally runs out of steam, as soon as this indicator starts to roll over, you want to have your 2 or 3 or 4 really good shorts ready and lined up. And then as the market rolls over and sells off, then we've got our downside targets. We put our bids out there. We cover the shorts. We take our profits, go to the sidelines, wait for the next market reversal. So that's exactly what we did this morning. We had this nice sell-off in here. We started buying stocks with relative strength. As the market goes higher, we're hitting our targets. We're in cash. We're waiting for the next opportunity. So that's how we do it. Those are the shorts that look good. If I went into the long side, you'd see a bunch of stocks that are taking off today. And I'm going to see if I can find a couple. We'll go into heavy buying. I've actually had a number of them. I could show you. DE is actually, I'm going to show you this one. DE is a stock that we are selling an out of the money bearish call spread on. And we got filled today, and we're going really high on that one. I take that back. I apologize. We got filled on another bearish call spread that you're going to see in tomorrow's video, but we are looking to sell that DE 152.50, 155 call credit spread for 50 cents. So that's another stock that I like on the short side from a swing trading standpoint, but not from a day trading standpoint. We're going to need to get a rally probably up to 140 or so before we can get filled on that. So, and the other stock that I liked on the short side, bearish swing trade, I like selling the Disney April 24 110 calls, buying to 111 calls for a 20-cent credit. That trade we did get done. I see Disney is having a lot of relative weakness. You can see it right in here. It's struggling. You've got a huge market blow-off rally today. What's the stock doing? Can't even get back to its prior 108 high in here. So I think Disney sets up for a good short as well. I'm going to have to cut the video a little bit short in here. Click through a couple more stocks, see if we can find that relative weakness. We'll go into bull run. So if I'm looking for bullish stocks, I just pound this list right in here. And you're going to see, look at these stocks. So easy. These are all our really good candidates on the long side. So if you were bullish, you'd be looking for relative strength and relative weakness in here. You're looking for that. You can see it right up and through here. You get through the high of the day, gone. That's how we do it. So please sign up for the free trial. I've got a 2-week free trial. You can come in and try Option Stalker. Subscribe to the YouTube channel. Please turn on your notifications so that you never miss one of these videos. I've just shown you every trade that I showed you this week. Every swing trade I showed you really worked out well the next day. So make sure you turn on your notifications so that you don't miss any of these videos. You can be on top of them right away. If you like the content, please give it a thumbs up. Thank you. Have a great weekend. We'll see you Monday morning. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.